When we deal financially with people that we like, care about and trust, there's tremendous opportunity for improvement. Imagine that you needed a loan. You're going to buy a house and you need a loan, and the bank is giving you a loan at a 4% interest rate. And your parents also have money that is not making any interest, and your parents are asking you, do you want to borrow money from them instead of a bank? What would be the maximum interest rate that you would prefer to pay your parents than to pay the bank? Right? So think about it. So, you know, if your parents wanted 3.5% and the bank wanted 4%, that's of course an easy question. What if your parents wanted 6%? Think about that. You know, personally, if I gave my parents 6%, I would be much happier than giving the bank 6%. I mean, it's more, that's true, but I get to give money to my parents, which is also great. So when you think about those things like this, money is a part of our, it's not just money, it's a part of our social transactions. Now, think about the local merchant. There might be a local merchant that needs some money, and my interest is both to help them, to keep them going, to help them grow, and to make money. A big bank has no interest in any of the social exchanges. They don't have vested interest in their success. Think about a community as a company, as a startup. We're each individuals, but we're all deeply vested in the improvement of the community. What kind of financial mechanisms we could do to help each other out? When the financial crisis in 2007, 2008 started, a lot of houses went underwater. People owed more on the houses than they were worth, and people just abandoned their houses. Now, when somebody abandoned their house, the value of houses in the whole community went down, right? Now, that person that their house was under basically was trying to renegotiate a mortgage. Sometimes they could, sometimes they couldn't. But the reality is that all the neighbors would have had a vested interest in helping that person raise the value of the property, because everybody lost. Now, it's obviously an extreme example, but it shows you the extent to which our financial lives are tied to each other. But the mechanism, the piping, the ways we help to each other, the mechanisms are just not there. We tried with financial institutions to create a mechanism that would help neighbors to help each other with their mortgages. We couldn't do it. Blockchain is going to allow this to happen, right? All of a sudden, we can treat ourselves not as individuals dealing each other separately with a financial institution. We could think about the benefit of the whole group and help each other and help ourselves in the process.